Hello, my name is Elliott. I'm editor of Personal Finance and the Energy Strategist. I want to talk a little bit today about coal, an energy market you don't hear as much about as you do about oil and some other energy-related commodities. Coal is extremely important to the world energy picture. As far as electricity generation, about half of the world's power comes from coal. That's actually a type of coal called thermal coal that's burned in power plants. In many of your developing countries, your fastest growing countries like China and India, coal is a much larger percentage of the power grid. So in China, it's about 80%, and in India, it's closer to 69 or 70% of their total power generation. Coal demand is growing very, very rapidly in these countries. You may hear a lot more about China promoting alternative energies and promoting greater use of nuclear power and natural gas. But the fact is they're still growing their coal power plant capacity very, very rapidly to meet fast-growing demand. The simple fact is that coal is cheap relative to most other sources of power. And in China, it's relatively plentiful. China is the world's largest producer of coal. However, their demand is growing so rapidly that they're actually started to import coal over the last couple of years. 10 years ago, they were actually a fairly large exporter of coal to places like Japan and neighboring countries in Asia like Vietnam. But now they're actually a fast-growing importer of coal. India is actually an even more interesting story in many ways in terms of thermal coal outlook. India has a long-term plan that involves opening up a great deal more coal-fired power plant capacity. Yes, they're pursuing things like wind power and all that, but these are all a very small proportion of their total power capacity. And really, they're going to need to rely on coal because, again, India, though it's fast-growing and rapidly developing, is still a poor country with a tiny fraction of the U.S. in terms of disposable income, and they really need cheap sources of power that they can grow very, very rapidly, and that really means relying on coal a lot more. In fact, India is expected to be the world's fastest-growing importer of coal over the next 5 years. It's going to be an even faster growth importer of coal than, say, China. One thing about India is they do have some domestic reserves of coal, but a lot of it's what's called lignite coal, very poor quality coal. Typically, that would need to be mixed with a better grade of thermal coal imported from someplace like Australia, Indonesia, those being the two largest exporters of thermal coal. So we're going to see a lot of growth in these developing countries. The other area to watch in coal is what's called metallurgical coal, often just simply called met coal. Met coal is a higher quality of coal, has a higher BTU content, in other words, more British thermal units of energy in a given amount of coal than thermal coal. This is actually used in steel making. There are other ways to make steel, but they require a greater supply of scrap metal. And in a lot of the countries which are seeing the fastest growth in steel production, they don't have a huge amount of scrap metal. They're making steel using iron ore and in steel blast furnaces, which require the use of metallurgical coal. Now, metallurgical coal, the world's largest dominant exporter of metallurgical coal is again Australia, and it is seeing very rapid growth in exports to both China and India, as well as other countries around the world like Japan. Also, as the global economy rebounds from the 2007 through 2009 recession, we're seeing a bounce back in demand for steel. So other steel-making countries like South Korea and Japan also importing a lot more metallurgical coal from Australia. So on the two sides, we have the thermal coal used in power plants and the metallurgical coal used in steelmaking. Now, what does this all mean for the United States? Well, the United States actually has the world's largest reserves of coal, though we're not the world's largest exporter of coal. And there are really two sides to this story. On the thermal coal side, traditionally, the U.S. market has been very focused on the United States. We haven't been a big exporter traditionally of thermal coal used in power plants. So we mainly produced enough coal to generate the power we needed domestically. That is beginning to change a little bit. We're seeing increased interest in developing an export port out of the West Coast that would be able to send thermal coal produced in an area of the western U.S. called the Powder River Basin for export to Asia out of the West Coast. We're already seeing some exports of thermal coal out of Canada, which is mainly U.S. coal, which is being transported by rail up to Canada and exported out of ports on the west coast of Canada. There is a lot of talk about doing the same thing out of the west coast of the United States. Another possibility, which is gaining some traction, is that the Panama Canal is being widened, and therefore it would be able to accommodate much larger ships that could carry coal from exported out of the Gulf Coast, where we already have some export terminals, through the Panama Canal into India. India being, again, a major fast-growing importer of coal, looking for alternative supplies besides just relying solely upon Australia. And U.S. coal with their large reserves would be an obvious candidate. But these are still sort of in the early stages of growth. Still, most thermal coal in the United States is produced and used in the domestic market. Right now, thermal coal prices in the U.S. are fairly depressed, actually, because electricity demand in the U.S. isn't growing as rapidly as it is in places like China and India, obviously. We are seeing a bounce back in demand from recessionary lows in 2007 and 2008, but we're still not back up to sort of pre-crisis levels. That's beginning to change, but we still have a fairly large glut of thermal coal domestically, and again, with limited exportability near term and power demand really just starting to generate, it's going to take a while for that glut to sort of disappear. I think at least another 6 to 9 months. But it is time to start looking at companies producing for the domestic market because frankly, 6 or 8 months from now, things are going to look a lot better for thermal coal pricing in the U.S. than they do right now at the end of 2010. How about metallurgical coal in the U.S.? This is actually a very interesting area. The U.S. produces some of the highest quality metallurgical coal in the world. A lot of it comes out of the Appalachia region. Central Appalachia, places like West Virginia, produce a lot of metallurgical coal because it's a very high value, it's a very high price per ton compared to thermal coal, high energy content per ton. It actually is a perfect export. And we already are seeing a great deal of export growth in metallurgical coal out of the U.S. market from Appalachia. Some of it's going to Asia. A lot of it's actually going to Europe, but it's actually indirectly replacing exports from other places. For example, Europe used to import a lot of metallurgical coal from places like South America and South Africa, but a lot of those exports are now headed to Asia. So the U.S. is kind of filling that gap. So sort of indirectly, we are exporting it already to Asia. You're seeing very strong growth in pricing for metallurgical coal in the United States, very strong growth in exports, companies looking to export more metallurgical coal. So that's also a potential growth area for the U.S. So in terms of playing coal, you really want to look at two basic areas. You want to look at companies with exposure to Australian mining, because Australia is the world's largest metallurgical coal exporter, and it sort of vies for the #1 spot with Indonesia in thermal coal. However, I think Australia is going to become the world's largest and dominant exporter of thermal coal as well, primarily because it has the infrastructure in place or in development to export more coal, and Indonesia simply doesn't. So I think Australia is really the key market to watch in terms of playing Asia directly. But don't forget the United States. The thermal coal market here is improving as power demand bounces back in the U.S. And 3 or 4 years down the road, you probably will see more thermal coal exports, especially out of the western part of the United States. On the metallurgical coal side, already really a boom in places like Appalachia. There are a number of producers in Appalachia that have traditionally focused on sort of a mix of thermal and met coal. Obviously now they're trending more towards that met coal side because that's where the prices are. So some of those are very investable and worth checking out as well. Thank you very much.